Nariman, welcome back to Bottom Line. Always a pleasure to have you on.
Thank you.
Nariman, today's data revealed a drop in the personal savings rate. What happened to the lessons learned during the height of the recession? Are Americans once again spending more than they earn, or was this a release of pent-up demand following that drop in gas prices?
Well, the good news is they're not spending more than they earn because the saving rate's still positive, around 5%. But you're right that they actually cut back on their savings in order to spend as much as they did in July. That's one source of concern going forward. The other is that disposable after-tax income actually fell. So it means that spending probably is not going to hold up at these growth rates. And then finally, this was in July. Of course, in August, we had that big drop in consumer confidence because of all the market jitters, because of all the nonsense in Washington. So chances are very good that the August numbers, September numbers are going to be very weak. So we're worried.
Yeah, you just hinted at it, but let me ask, can consumers sustain the pace of spending? And what's the risk for growth in the first quarter of next year?
Yeah, the answer is no. They can't sustain, certainly not this level of spending. They may be able to sustain growth rates of, a tenth or 2%. I mean, going forward, looking at it on an annualized basis, we're looking at growth in consumer spending of no more than about 1% a year. And so the answer is that growth will continue, but at an extremely sluggish pace, both in terms of consumer spending and the overall economy.
Okay, we're talking about next year, but let's take a look forward to this year. Today's numbers, how might they change the outlook for GDP growth in the third quarter?
Well, third quarter, at best, we were looking between 1 and 1.5%, and about the same in the fourth quarter. So we're looking at a period of extremely weak growth. I don't think it's going to go negative, but I think it's going to be barely positive, basically.
Nariman, how might the Fed interpret today's data? Does it lend weight to those who are looking for a third round of quantitative easing, or to those who believe the Fed should maintain its stance, as policymakers they like to say, for an extended period?
Well, as you know, a lot of the signals on the economy have been very mixed. This is one of those that looks a little stronger than others, but other numbers are looking quite weak. So the Fed's going to look at a lot of different numbers. This certainly is sort of on the strong side of the balance, but on the weak side, there are going to be a lot of other issues to worry about. I think, in particular, they're going to pay attention to the employment numbers that'll come out this Friday. If they're strong, that will make the Fed sort of think twice about QE3, as it were. On the other hand, if they're very weak, it would add credence to those who want QE3.
Nariman, speaking of those employment numbers, what are you expecting?
Well, we're expecting something around 50,000 jobs created, which, again, good news is it's positive. Bad news is it's very weak. So that would be consistent with this notion of an economy that's getting close to stall speed, but not stalling yet.
Nariman, another report today showed that the number of contracts to purchase previously owned homes fell in July for the first time in 3 months. That's a sign that lower prices and borrowing costs are failing to lure buyers. How hard is it to get a loan right now?
Well, it's actually not that hard to get a loan, or let me put it this way. It's easier than it was, let's say, a couple of years ago. But the problem is demand. A lot of people aren't willing to take the risk of buying a new home right now. A lot of households waiting, a lot of people putting off the decision to move out of their parents' home or to get married. So it's that's causing the problem here. It's lack of demand more than anything else, and extreme caution. Extreme caution on the part of people who might want to buy a house.
Nariman, in our last minute, insurance stocks, they're on the rise today after estimates that Hurricane Irene caused less damage than first feared. How does an act of nature like Irene affect economic indicators, especially during these tough times?
Well, the good news is that despite, obviously, the fact that it did cause a lot of damage and obviously killed a number of people, the good news is in terms of the macroeconomy, this particular hurricane is tiny by historical standards. The costs are maybe $3 to $5 billion compared with, let's say, Katrina in 1985, that was $100 billion. So good news is, from an economy's perspective, fairly limited damage.
Nariman Behravesh, Chief Economist, IHS, joining us from Lexington, Massachusetts. Nariman, it's always a pleasure. Thanks so much.
Thank you.